Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Starting a fresh week, the Australian dollar managed to break its losing streak, as you can see from the 4-day decline, and posted a relatively firm candle on Friday to close out the week on a positive note, which is expected to continue on this week. Looking at the technicals though, I would like a little bit more support from the RSI and the MACD to give the upside call to 66.5 to around 67.40-45, which continues to cap the market to extend on to 68 cents. Looking ahead to this week, key events include the Australian retail sale and the CPI year on year, with a forecast at 3.4%, previously at 3.5%. Then out of China, updates from manufacturing PMI and non-manufacturing PMI are expected. While in the US, the focus will be on the GDP and also Friday, the Fed's preferred inflation gauge, the PCE index. Meanwhile, the dollar index, which measures the greenback strength against a basket of 6 major currencies, slipped from 105.05 and currently trades around 104.75. The euro also respected that key support level, which was at 107.60-80 area, and from the bounce has potentially put it in a prime position to break higher and look on towards 109 to 110 as a potential target. I like the way this market is structured in terms of the uptrend, and the RSI has picked up, and also the MACD is still holding above the zero line to support a positive case, and therefore any weakness should find again support at 107.60-80. After grinding higher, we can see that yen strength has returned and now looking back towards 156.65 this morning. In light of how the market is set up, we do need to see a little bit more to confirm a bearish case. That is a break of 155.80. That would expose the region down to 155.15 and still awaiting that call of 150.5 to 151. While viewing the top side, no assessment is considered due to the high volatility above that 157 area. Sterling also looking firm after posting engulfing candle and still potentially can see a further gain. That is on towards the region of 127.80-90, which may see profit taking. Reason why I view this is that there is some bearish divergence that would incorporate a downturn, but I feel the market may find support around 126.40. The reason behind that is the broader case is looking up towards 128 to the weekly view of 131. After 2 heavy days in gold and losing 100 points or $100, the market has hit the brakes and now showing a little bit of recovery. But I feel there is still a bit more downside risk, and that is down towards 2,326 or lower to 2,314. But given the fact that we have broken a significant level at 2,360, may potentially see the broader target looking down towards this level of 2,250-80 area and reassess. Wrapping up with oil, the market is likely to be thin to the start of the week as the US is out in observance of Memorial Day. Nevertheless, the support level of 76.40-55 has held, although there was some pressure on Friday and staged a bounce. But the technicals are negative, and therefore any upward attempt may actually fail towards $78 a barrel and eventually see the down test that is towards 76.40. Now a break there would give further scope and look towards this head and shoulders move, which is around 72.65 to 73.5. Well, that's a wrap. Thank you for joining me. As always, look out for the interest rate report, and I hope you enjoy the great start to a new week.